Guys, welcome to the first ever weekly commentary. Now, essentially the reason that we're doing this is we want to provide you guys with some sort of an understanding into how me and Aaron actually view these markets, the lens that we use, the perspective that we have, and what we use to essentially form a narrative, okay? Because we're very, very big on forming a narrative in price, understanding your directional bias, and then using the technicals to essentially just get in line with that price action, and hopefully hit some banging trades, right? So, I mean, we can just start off straight away with this this new week opening gap. Okay, what was the catalyst for this new week opening gap? It was Iran announcing that they've closed the strait again, and I know some of you guys might be thinking, didn't they literally just announce that they were reopening it? And yes, they did, but of course there's been some violations in the ceasefire agreement from both parties, by the way, not just one side, and they've gone with the decision of closing it again. Okay, so that's been the catalyst for this upside momentum. All right, this aggressive push to the upside, and of course this could be the beginning of a new phase of escalation. Okay, but we'll get onto that in just a little bit. What I kind of want to draw your guys' attention to, right, is two things first, right? What we're doing is especially where my eyes are going is oil, right? Oil and volatility. Those are the two measures that I'm looking at right now. How volatile are these markets in general, right, across the board, and how is oil printing, right? Is it looking for that upside? Is it got backing for that upside pressure? And is it printing in that direction? Or are we printing to the downside? All right. So what I kind of want to show you guys, right, is this timeline of events. This initial downside pressure that we had, right? What was the catalyst for this? This was the ceasefire agreement. Pardon me. Right. Yeah, so this downside pressure that we had here, this first leg of distribution to the sell side, was essentially because of the ceasefire agreement, right? And this is a fairly standard reaction in price. I mean, it makes sense, doesn't it? If essentially things are resolving and we're seeing de-escalation efforts, of course there's going to be downside pressure, right? Because people are anticipating essentially supply going back to normal, okay? Going back to equilibrium, things calming down. Okay, less disruption. So let's actually put into words. Markets are pricing in de-escalation. By the way, guys, if you want to be taking notes on these commentaries, you can do. It's completely up to you. It's just to provide you guys with some sort of value when you're actually approaching the markets, right? And hopefully it can help you in forming your own narrative. Of course, don't just blindly listen to us. Do your own analysis. Do your own fundamental analysis as well. Understand where the markets are going. Use your sort of critical thinking. Okay, that's what I really want to preach here. I want you guys to be using your own critical thinking. Okay, don't just blindly listen to anyone. Right. So yeah, back to it. Markets are basically pricing in de-escalation, things calming down, and less disruption. Like I said, that is a standard reaction. Okay, it's a very standard reaction. And then of course, what did we have here? We had Iran announcing that it was going to reopen the strait, and oil, of course, again, like I said, standard reaction, it tanked heavy. Okay, and I'm talking around a 12% drop just on Friday alone, right? So we've got that immediate reaction. We've got, okay, supply is back, things are stabilizing. Let's look to price risk out of this market now. Okay, that's what we're looking to do. We're pricing risk out of this market. But now, of course, with this new information that we're privy to now, this idea of Iran deciding to close the strait again, that narrative has flipped. Okay, so understand what was the narrative throughout this entire this sell side pressure that we had, right? This sell side movement, downside price delivery, right? What was the narrative? It was de-escalation efforts. Okay, we're de-escalating. We're looking to bring things back to normal. Looking to stabilize this market. Okay, stabilize oil prices, right? So then, of course, we had downside pressure. Now, I want to just get you guys understanding what would happen if this narrative flips. If this narrative now does flip towards escalation, of course this is a first catalyst. This doesn't necessarily mean anything just as of yet, like I haven't actually said, but tomorrow is the ceasefire deadline. I'm recording this on the 21st, so I do believe the market is sort of sitting on its hands and allowing for tomorrow to play out, so that we have a reason to either drive price higher or lower, right? But tomorrow is it's a fairly big day. But understand that if we were to now re-enter this escalation phase, right, where the likelihood of Iran and the US coming to some sort of an agreement, if the likelihood of that decreases, what are we going to see happen to this market? What are we going to see happen to this asset? It's of course going to print higher. There's going to be upside pressure. I'm not saying we're going to have clean traffic to the upside and straight back to this high. No, I'm just saying that there is upside pressure, right? The probability of price moving to the upside is greater than the probability of price moving to the downside if things are escalating, if the conflict is escalating, okay? So just keep in mind of that. And yeah, like I said, let's look at the current situation. We're in escalation. Well, the start of it, the very beginning of this potential return to escalation, okay? And that's what's caused this gap up that we're seeing at the open, right, with this new week opening gap. Now, you've got clear escalation signs as well. Understand what they are. Trump was tweeting out that Iran breached the ceasefire, okay? I can actually bring your guys' attention to it here. This is on Truth Social. Iran decided to fire bullets yesterday in the Strait, a total violation of our ceasefire agreement. Now, understand that it's not just Iran that has violated the agreement or the ceasefire. There's been violations from both parties. Okay, and of course, on top of that, I would take everything that this guy says with a pinch of salt. In fact, all of the US officials. Okay, try to work with facts, but do understand that the market at the moment is very reactive to these sort of headlines. Okay, to these comments, the market is very, very reactive to that because it's based around sentiment. Okay. So that's that. Let's have a look at financial juice real quick. I think it'd be good for you guys to see the impact of some of Trump's comments. He did say yesterday that it's highly unlikely that he will extend a ceasefire with Iran, right? And when we were given access to that information, you can see the effect that it had on markets, right? Oil, let's start with that first. Of course, this here is when we were given access to that information, and you can see upside pressure, okay? We had a bullish print on oil. Of course, how are we going to see that translated in the dollar index? Of course, again, upside pressure. Stocks and indices, of course, took a hit, right? So now you're starting to see that relationship between what's being said in the media and this information that comes out. You're essentially seeing its effect on markets and how we can use this narrative that is being formed to potentially get in line with price action, right? And price delivery. Let's go back to markets for a second. So essentially what I'm trying to kind of get into your guys' minds at the moment is just this idea of it isn't just noise anymore, okay? This is like genuine geopolitical tension that is building, and the market is just reacting exactly how you would expect. Right, so let's have a look at some cross-market analysis, okay? Let's see the reaction of this entire timeline on some different assets. So quick rundown. I mean, dollar's pushing higher. We're seeing that dollar strength, and that's just across the board. Gold is moving higher. Yields are rising. EU and GU would be dropping, of course, based off of that dollar strength. And the Japanese yen and the Swiss franc are strengthening, and that's purely based off of the narrative shift back to safe haven. Okay, so we're going from risk, right? In fact, it might be better to just literally write this out, right? You've got risk and you have safety, okay? You've got risk and safety, and essentially all we're seeing is this shift to, mind my drawing, guys, look, I'm not an artist, but we're moving from risk to safety, okay? That's what I want you guys to start to understand, that we're moving from risk to safety. So of course, safe haven assets, like I said, dollar is of course the major one to be talking about, but there are some upside implications for the yen and the Swiss franc. Okay, so let's actually have a look at the DXY. I mean, of course, during this period of de-escalation, what did we see? Downside pressure. So we saw sell side prints, and what I would like to see now, if we do sustain this escalation phase, and the likelihood of Iran and the US coming to some sort of a resolution, if the probability of that is low and stays that way, of course, for me, there's only one target. I would like for this this previous week high level to get tagged. Okay, because I mean, from a technical standpoint, it would also make sense, right? So that would be my draw if we can continue to push high here. Of course, I am going to monitor the situation from this level, right? And of course, mainly monitoring macro, monitoring that narrative, understanding any sort of sentiment shifts. Okay, so that's the DXY. 2 year for me is showing some really good signs of upside potential here. I would still need to see that break. Okay, I mean, we've had just basic market structure. We've had some lower lows, lower highs, lower lows, etc. Right? I want to see this switch now. I want to see this switch to upside. This, you can see this sell side print here. This was essentially them announcing the reopening of the strait. That has been entirely mitigated. I'm looking to see that reflected on, if I go back to oil, I'm looking to see that reflected, because this was the catalyst, right? This was them reopening the strait. And if I go to the 2 year, this was them reopening the strait. You can see the effect it's had, and you can see that for 2 year, for the yield market, we've essentially mitigated that entire move. I am looking to see oil, if I can bring it back there, yep. I am looking to see oil do the same here, right? So that's that. I mean, euro, of course. In fact, it's probably better for me to use this chart. Yep. Again, during this period of de-escalation and dollar weakness, we saw aggressive upwards delivery on euro. We've come to a fairly decent level, but of course, euro is quite strong. I mean, solely talking about euro, it is quite strong from a macro standpoint. So I would be careful shorting this market. I can see short-term pushes to the upside on this, but based upon dollar strength here and the narrative that I'm forming with that, I would still see this asset being priced in lower. Okay, so at least in the near term, right? And the same will be said for, can be said for GBP USD. Okay, I mean, we had quite a bullish print, a data print on GU today. So of course that's why we're seeing, if I just bring it back to the lower time frames, this is the price action that we're seeing on GU at the moment, and of course you can see Euro USD failing to have that same sort of upwards pressure. Okay, and that's based on the bullish data print that we had for sterling today. Okay, so that's that. But guys, remember, I mean, for me, the main thing at the moment, it's going to be this market. Okay, this is what I want all of you guys to be focusing on, and essentially how this market prints is what you're going to use to attack whichever market whichever asset you're looking to trade, right? But this is just textbook risk off behavior. Like I said, we're moving from risk to safety. Okay, so money's flowing out of that risk and into the safety. Okay, into these safer assets. Okay, so when you're looking at trades this week, right, I just want you guys to respect that underlying tone. Okay, this isn't a random move. This is driven by macro. This isn't just price looking to tag a daily point of interest or a weekly point of interest. No, understand the underlying driver here. Okay, it's a movement from risk to safety. Right. Now, here's where it gets a little bit deeper. Right, when oil does begin to start rising again, right, which will essentially is what we're anticipating, right, with this escalation phase, it feeds directly into inflation, and that's creating a problem for central banks, right? I'm sure that most of you guys are aware of this, but just for some of you guys that may be just getting into understanding macro, this is something that you need to be aware of, right? It creates a problem for central banks. We're already in a very fragile economic environment. Yeah, understand, off the back of COVID, we had to hike rates to significant levels, right? And we had only just began easing. We just began easing. We had come closer and closer and closer to that 2% inflation target, and bang! Now we've had another disruption. Okay, so it is a problem, and central banks are looking to attack this. Okay, but they have to be very tactical in their approach to this, right? So growth is slowing, unemployment is starting to struggle. The labour market is not necessarily in the best position right now, let's just put it that way, okay? So economies aren't strong. So if oil was pushing inflation higher, central banks are going to be forced to hike their rates again, right? We've only just come, well, we're going closer and closer to that 2% inflation target. Most central banks were getting closer and closer to that target. But now if they're forced to hike rates again, that's quite dangerous, okay? Because hiking, understand this now, hiking rates into a weak economy is exactly how you end up in stagflation, right? And stagflation is essentially just low growth with high inflation. And that's not normally how it works, right? If you do have higher and higher prices, it's normally coupled with a boom in the economy, right? Excessive levels of growth, okay? So that's basically the worst case scenario for an economy. So it just reiterates that sort of point of central banks have to be very, very careful here. They can't just react aggressively. They need to be tactical. So they're going to be looking at what? They're going to be looking at the underlying facts, right? They're not going to be moving off of sentiment and 1 minute Trump is saying this and etc. etc. We're looking to be where the money is flowing. Right, that's what we're looking to do. We're looking to be where the money is flowing. So let's look at what's really happening in this case. Okay. So let me tell you what the market's going to watch. Right. Right now, markets are focused on the 22nd, which is when the ceasefire officially ends. Like I said, I'm filming this on the 21st. So tomorrow, it's a fairly big day for us. It's a significant day. Let's just say that. Okay. Now, the ceasefire ends tomorrow. I'm not saying it's been respected in the first place, but it's still a key date to keep in mind. Now, what's interesting is Trump has just come out and said it's highly unlikely that ceasefire gets extended. Remember, I showed you guys that the comments on Financial Juice, right? And we saw the effects of that on the market. This is the most important thing for me here. I want you guys to understand and start to implement critical thinking. Okay, you can interpret this, right? This idea of it's highly unlikely that the ceasefire gets extended. You can interpret that in two different ways. And this is where I want you guys to sort of make your own sort of decision here. Okay? Come to some sort of conclusion. But I'll give you the two scenarios. I mean, one, he's basically preparing the market for escalation. Okay? Meaning he's ready to take this further. Okay? If he's saying it's highly unlikely that the ceasefire is going to end, you could be reading into that as, okay, it's highly unlikely that the ceasefire gets an extension. That means he's looking to ramp up escalation again. Pardon me. Right? And what's that going to mean? Like we said, on oil, higher prices. Right? But now, here's the second scenario. Right? And this is what I feel like some people might not necessarily be taking into account. And I'm not saying that this is the way that price will play out. It's just something I want you guys to keep a note of. Okay? The idea of him saying that it's unlikely that they will extend the ceasefire could potentially at least, mean that he's confident that a deal will actually get done in the next couple of days. So there won't need to be an extension. Right? And right now, the market doesn't know which one it is. Okay? Which is why it's all eyes on tomorrow. Okay? We'll see what comes out. But that uncertainty is what is going to feed volatility in this market. Don't be in a trade because of volatility, right? That's not the reason. Yes, you need some form of volatility in a market, but you want there to be some sort of logic behind that trade, okay? Don't be in a trade for volatility's sake, essentially. So heading into the 22nd, expect things to stay unstable with headlines essentially driving a lot of the movement. Now, this is where most traders get wrong, right? a lot of traders are essentially treating this like it's just another geopolitical spike, right? And it will fade and markets will go back to normal, okay? But realistically, I want you guys to understand that it doesn't work like that. It can't just automatically, let's just say everything, they come to an agreement tomorrow, bang, we're all back to normal. No, okay? There's something called a lag effect, okay? Now, with that lag effect, you've got shipping delays, you've got increased transport costs, supply chain disruptions, and just general confidence issues in this market, okay? You've got confidence issues in oil, right? In the supply of oil because of everything that's happened here, right? And all of that will take time to normalize, okay? And people, I feel at least, from what I'm seeing on social media where people are talking about it, they're underestimating that, okay? Now, don't really need to give you guys any context into why the Strait matters so much. I'm pretty sure you guys already know already. I mean, 20% of all seaborne oil trade. Even small disruptions in that can have massive impacts. So of course that lag effect will also be quite dangerous, right? Now, let's go at market behavior. This is where I feel like there's an interesting disconnect in price, okay? What you're going to see first is price will drop fast on positive headlines. Like we said here, price is dropping fast on positive headlines. In fact, I can even bring it back to this, right? This is when Trump tweeted out, falsely by the way, that there was talks with Iran, okay? And then Iran officials essentially came out and told everyone to fade that move because there were no talks with Washington, okay? So you can see this aggressive move to the downside. So it dropped quite aggressively, quite fast. And then we saw sustained upside pressure, sustained upside movement, okay? So what's happening? These sell-offs that we're seeing, they tend to feel a bit weak once they settle. Based on everything that I'm saying, remember the lag effect as well, right? These sell-offs, they tend to feel a bit weak once they settle. You can see here, we have needed a catalyst for these sell-offs. We have needed catalysts, even back to here. We have needed catalysts, but the upside pressure has been gradual and slow. And normally that gradual, slow move does kind of dictate where price is really looking to head. The fast move is usually the incorrect move, okay? So the reason that they feel a bit weak once they settle is because fundamentally supply is still tight. In the background, supply is still tight. Even if we were to come to a resolution tomorrow, supply is still essentially fucked up. All right. Now on the flip side, when oil pushes higher, it's usually because the market is starting to price in that real risk again, right? And those moves, they tend to have a bit more of a follow through. Like you can see here, I mean, we had this break here with Trump's false claims of being in talks with Iran and how this entire war, this entire conflict was going to end very, very soon. And this was back on the 20th of March, around the 23rd-ish, right? And you can see the follow through. We didn't just trade back to where we was before that information. We had a follow through with momentum up to this level. And then of course a catalyst with this ceasefire agreement sent us back to this dealing range that we were in, okay? So those moves, like I'm saying, those bullish moves, right, they tend to have a bit more follow through. So just keep an eye on that, right? It is exactly what we could be seeing now with the Strait being closed again. So now look, this is how essentially I'm going to be approaching this week, right? I'm going to personally go into this week respecting the risk off environment, okay? I ain't going to fade moves blindly, right? I'm going to be fairly patient, more patient than I normally would be, and let the market show its hand to me, because this is not a normal week. Out of all weeks, this week is not a normal week, okay? It's a headline driven, macro driven and sentiment driven market, okay? And in these conditions, I mean, you just do not want to be forcing trades. You never want to be forcing trades, but out of all conditions, this will probably be the worst condition to do that, okay? So yeah, just keep an eye on oil, keep an eye on headlines around Iran and the US, and any talks or any sort of movements towards escalation or de-escalation that happen on the lead up to the 22nd, so lead up to tomorrow. Okay, I mean, Trump is speaking literally as I post this. Hopefully by the time that I get this into the Discord, he would have spoken, and you guys have a bit more of an idea on where this market is looking to price in. Okay, so yeah, stay disciplined, don't get caught chasing, and just let the setups come to you. But I hope you guys enjoyed this. Hope you guys enjoyed this. If there is anything that you would like us to touch on, just let us know, and we'll touch on it in the next weekly commentary. So sweet. I'll catch you guys in the next one.